Because the biggest risk investors worry about, AI, might not actually attack Duolingo's core advantage. In fact, the company's strongest competitive advantage has almost nothing to do with language learning itself. A company that grew revenue from $70 million to more than $1 billion in just 6 years. Operating margin improving, free cash flow exploding, returns on capital now exceeding 30%, and balance sheet with over $1 billion in cash. By almost any financial metric, this looks like a very strong business. Yet, the stock has recently been under pressure. So what exactly is the market worried about? Is this simply a temporary sentiment shift? Or the investors are starting to question the long-term growth story? In this video, I will first show how financially strong this company actually is. But interestingly, financial strength is not what investors are worried about. We will then look at the real concerns the market has about Duolingo. And finally, I'll explain one competitive advantage that many investors underestimate. It has very little to do with AI, and it might be the most important part of the entire story. In 2019, Duolingo generated about $70 million in revenue. By 2025, that number crossed $1 billion. That's roughly 15x increase in 6 years. Few companies scale that quickly while maintaining healthy economics. The company has also maintained gross margin around 72%, which is typical of high quality software platforms. What's particularly interesting is the shift from growth to profitability. Operating margins improved dramatically, minus 22% in earlier years to around 13% today. This is a classic sign of software operating leverage. As revenue grows, cost rises much more slowly. Cash generation has improved even more dramatically. Operating cash flow has grown from about $2 million in 2019 to nearly $390 million today. Free cash flow now stands at roughly $370 million annually. Capital expenditure is relatively small, about $27 per year. That means Duolingo converts a significant portion of its revenue into actual cash. Few companies with this level of growth generate such strong free cash flow. The balance sheet is also unusually strong. Duolingo holds more than $1 billion in cash and short-term investments. Total debt is only about $100 million, which means the company effectively operates in net cash. That gives management enormous flexibility to invest in product development and innovation. Another interesting metric is deferred revenue. Deferred revenue represents subscription payments that the company has already received but not yet recognized as revenue. For Duolingo, deferred revenue has grown from roughly $26 million in 2019 to nearly $500 million today. That means hundreds of millions of dollars of future revenue is already locked in through subscriptions. Return on equity is now roughly 38%. Return on investment capital is about 35%. These numbers suggest that the company's investments are generating very strong economic returns. But despite these strong financials, investors have recently become more cautious, and the reasons are actually quite simple. The first concern is user growth momentum. Duolingo still has tens of millions of daily active users, but the growth rate has slowed compared to earlier years. For a company valued as a high growth platform, even modest deceleration can change valuation expectations significantly. Investors price companies based on future growth, not past growth. The second concern is AI disruption. Large language models can now function as personalized language tutors. In theory, someone could simply ask an AI assistant to practice Spanish, explain grammar, simulate conversations, which raises an important question. Will language learning increasingly happen through AI assistants instead of dedicated apps? Duolingo is integrating AI features into its platform, but the competitive landscape could evolve quickly. Another concern involves monetization charges. The company has experimented with more advertising in free tier, stronger push towards paid subscriptions. These changes increase revenue but may also introduce friction for new users. Finally, the market itself has changed. A few years ago, investors were willing to pay extremely high multiples for growth companies. At one point, Duolingo traded at over 650 times earnings. Today, the valuation is normalized significantly, closer to 12 times earnings and about 5 times sales. This compression reflects a broader shift in how investors price growth stocks. And this is where the story becomes interesting because the biggest risk investors worry about, AI, might not actually attack Duolingo's core advantage. In fact, the company's strongest competitive advantage has almost nothing to do with language learning itself. It has to do with human behavior. Duolingo is not just a learning app, it's a habit machine. The company's real product is daily habit formation. Features like streaks, XP points, leadership boards, daily goals, and notification from the hour are designed to make users return every single day. If someone has 500-day streak, they become psychologically attached to the app. Breaking the streak feels painful. This same behavioral design appears in platforms like Snapchat streaks, TikTok engagement loops, Candy Crush Saga level progression. AI tools currently don't replicate this type of engagement. Duolingo also has an enormous dataset. The platform serves more than 80 million monthly active users, billions of completed lessons. This allows the company to understand where users quit, which exercises work, what keeps people engaged. This data advantage helps continuously improve the learning experience. The hardest part of language learning isn't difficulty, it's consistency. More people quit after 1 week, 1 month, 3 months. Duolingo solves this through gamification and habit design. AI tutors can teach, but Duolingo focuses on making people come back every day. The Duolingo owl, Duo, has become one of the most recognizable mascot in tech. The company's marketing frequently goes viral through TikTok memes, humorous reminders, playful threatening streaks jokes. This creates an unusually strong global brand for an education platform. Imagine a user with 1200-day streak. Switching platforms would mean losing their streak, leaderboard ranking, learning progress. That creates a powerful psychological switching cost. This leads to an interesting question investors sometimes debate. Could Duolingo eventually become the TikTok of education? Because if the engagement continues increasing, the monetization potential could be enormous. Duolingo has successfully transitioned from hyper-growth startup to profitable platform. The numbers show strong revenue growth, expanding margins, exceptional free cash flow, strong recurring subscription revenue, and a very healthy balance sheet. But the market is still debating the future. If the company continues expanding engagement and products, the business could compound for many years. If the growth slows or AI significantly changes user behavior, the valuation may continue adjusting. And that tension is exactly why the stock remains such an interesting company to analyze. If you enjoy breaking down companies through financials rather than headlines, subscribing to the channel might be worth considering. Most videos here focus on understanding how businesses actually create long-term value. And if you are interested in exploring global companies like Duolingo yourself, I have placed links in the description for platforms like Wasted Finance and IND Money. Feel free to explore them if you are curious.